So what's up everybody? Hopefully you all pretty much have had a fantastic day. Pretty much what I was thinking of covering today is pretty much simply the bias. So I'm gonna go through pretty much my predictions and my expectations for the upcoming week. And I would just right now recommend everybody to be extra careful and extra conservative this week because that's pretty much exactly what I'm gonna be. So I'm gonna pretty much try to stay away from trading as much as possible, when I'll explain why that is in this call, and I'm also pretty much gonna explain how you can anticipate bad price action happening in terms of time, because there's two instances in a year, if you're focusing on seasonal tendencies, where the price tends to get slowed down and you tend to get bogged down, and where a lot of people actually tend to quit on trading because they're thinking that market conditions always is like this. Now, one thing I need to say before, or clearing up before everybody goes in and telling me, oh, but I think the market conditions is good, is that is personal preference. All right, market conditions is all personal preference. You can trade market conditions which you find awful, and I can pretty much like them, and it could be the opposite way around. Um, Now, how you avoid trading in bad market conditions according to yourself is pretty much in accordance to that you're collecting the data you need to understand pretty much which conditions you like, which conditions you don't like, which conditions you overall would like to, prefer to be trading in, and how you pretty much can be trading in those and minimizing the bad periods. Because in the bad periods, pretty much what that will cause you to pretty much experience is less win rate, or and of course less risk to reward in your given mechanical trading edge or your given system which you overall are trading. So that's why you pretty much want to avoid those. Now we pretty much when I have cleared this up, let's just move on. So Monday, pretty much what do I expect? So just pretty much right now I want everybody to just load up the DXY, because this is going to be based on the DXY and based on pretty much my predictions of what overall I'm expecting the DXY to do and how it should go. So if I say bullish, it's pretty much I mean bullish for the given DXY. Now for Monday, right? I'm pretty much gonna wait up the whole Monday. What I would like most probably think will happen, if y'all pretty much just go in quickly and look at the DXY, you can see pretty much we have a lot of built up sell side liquidity resting, and that's pretty much what I've taught you news events will do. It will reach where over you have more sell side liquidity or buy side liquidity on a more probable basis. And in this case, pretty much we have news events from 9:15 to overall 21:20. This is UTC plus 1. Now these given news events, right? These given news events most probably will go towards the sell side liquidity resting below the equal lows on the DXY. On you can go to the 15-minute time frames and you will be able to locate it. After that, pretty much my predictions is, and of course follow your own predictions. This is really important. That will actually from Tuesday onwards reach up and take the buy side liquidity, because if you actually look up, you'll actually see equal highs on the given DXY. And I'll explain why I think particularly this will happen, but it plays into Seek and Destroy program, in which case that's exactly usually the thing and how the market usually moves in December, or in a bad price action period. But I'm particularly going to cover the two given times of the year, which is unprofitable in a given teaching lesson today. So I'm including the teaching lesson in the overall bias, right? I always do that. As you saw last week, we pretty much predicted the week perfectly. We got the high of the week and we got the low of the week. I'm going to link the video right here as well. So please check that video out as well, because it's a very good learning experience where I actually unveiled the IPTA alignment, in which case we're actually going to cover the IPTA alignment today as well in this video, because IPTA alignment is pretty much, we're going to go in and talk about it. But Wednesday pretty much pretty much, I would say a region up higher, taking DXY's equal highs. Now, from Wednesday onwards, I think we're going to be bearish. So I think these news events right here will be bearish. That's just my predictions. Follow your own predictions. Thursday, Friday will just be bearish for the DXY. Now, it could be completely wrong because it's December. It's real improbable, and I'm going to be real conservative with trading. And I don't even know if I'm going to take a singular trade this week. We'll see how it goes. However, if you have made a lot of profits this year, I would not recommend you to continue trading. Instead, wait for just next year. All right, that's just my recommendations. Anyways, let's just move on towards the given DXY. So just loading up the DXY here, what everybody can pretty much see and be able to see is the market maker sell model, which we have covered, and this is located in a much bigger market maker sell model as well. So that's just two confluences, two high time frame confluences that overall, aligning with my bearish expectations for the given DXY, because I'm bearish on the DXY, right? Now we've taken out previous yearly high, which is time-based liquidity, and overall we have displaced from this high, as everybody can see. What I would overall prefer happening now is just a continuation lower. However, on a more intraday basis, price is not going to just move down lower, right? So we're going to cover pretty much on a more intraday basis why I think price will do the thing I pretty much think it will do during this week. So going into just a 50-minute time from here, what everybody pretty much can see is that pretty much this is how we call the low and the high of this given week. So please check the last call out, like I've pretty much said. What I would overall say to y'all guys now is pretty much that I'm watching the mid figure level here. So I'm watching the 300 or 300 level here. So this is a mid figure level. It's called, if you all go back to ICT's calls from 2017, 2016 to 15, you'll pretty much learn about institutional price levels, which I would recommend. So that's some given saw. So please annotate that one and go in and watch those things afterwards, after this call, because that's just some saws I'm hinting towards. Now, what I would overall imagine happening is, of course, us. If you divide this in two, this is a new week opening up. I would think we would trade first lower, like I said, reaching for the sell side, built up sell side liquidity rest in here. Is it a built up sell side liquidity here? I would most probably see us reaching down lower, taking that sell side liquidity before during the next given day trade up a little bit, possibly higher on Tuesday, right? Taking this buy side liquidity and this equal highs, which I hinted towards in the previous section of the video. So take those out, and then from Wednesday, Thursday, Friday onwards, pretty much delivering lower. Now, guys, let's just move onwards and let's just move in towards Euro USD. So on Euro USD, pretty much I'm just overall watching the opposite happening, where I think overall, even though we have no equal lows, all right, it's not an SMT between it and the DXY, just note. Instead, what I'm watching, and of course we'll just jump up to a daily time from here quickly here. So you can pretty much see right here the market maker buy model. Of course, we're located in the bigger market maker buy model. It's just two higher time frame confluences. Like I've said, we've taken out previous yearly low right here, and if you go into GU, we have not taken out previous yearly low, and we have actually formed an SMT between Euro and GU, which is of course another bullish confluence. You can see this market maker buy model. We've traded into this low risk sell area here. So if you zoom out a little bit, you can pretty much see low risk sell, and that's exactly where I think we're located here in this smaller market maker buy model here as well, where I think this will be a low. Low risk buy and low risk buy, where I think this will be a low risk buy. However, as we're overall predicting the DXY taking its given high, I'm predicting Euro taking its given low as well. So if we now jump down into the 50-minute time frame which we were on, you'll pretty much see the built up buy side liquidities, where you can see the equal highs here, the equal highs here. All right, there's a lot of built up buy side liquidity. I think we're gonna reach up first, the first part of this given week, take this out, then afterwards, or possibly leaving this, it would be even greater for a buy later, and then sweeping this low, trading into the mid figure 500 level here, which is a price action level. You can see the price action level right here. I think we have a price action level just resting right there. I think we're gonna reach down for that, and then afterwards we're gonna trade up higher from the mid figure 500 level upwards. Now, you will pretty much see us Most possibly, because why is this? Like I covered, this is an IPTA alignment, right? And an IPTA alignment is pretty much PD arrays overlapping. So whenever you have PD arrays overlapping in a strategic area, that's just an IPTA alignment. That's just what I call an IPTA alignment. So that's just some given sauce. I covered it last week, where overall I said this would be the high of the given week, and this would be the given low of the week. In which case, pretty much I got it completely right. So it's just crazy how precise I was actually. So please go in and check that call as well, which is the last call, right? Now, particularly for this week, this is what I'm thinking. Wednesday, after we have taken our buy side liquidity and sell side liquidity, cleared all of that, either we'll consolidate or we're going to reach overall higher from Wednesday, Thursday, and Friday onwards. All right, so be bullish. My terminus is down here, and my terminus is that the given high on the given DXY itself as well. So let's just go over to GBP USD. So for GBP USD, what you all pretty much can see here is a formation of a market maker buy model in this larger market maker buy model. So if we go into the daily chart, you'll pretty much be able to see this market maker buy model here as well with the SMT I covered with Euro. Now you can also see this larger market maker buy model here as well. Crazy thing, right? So we're in the reconsolidation phase here. And I overall think this is the low risk buy soon, where if we actually trade up a little bit higher here, Monday start of Monday, trade up a little bit higher here with the news, etc., and then clearing buy side liquidity and then trading down towards this. I think this will be the low of the week, this right here, and then continue up higher, reaching for the EC-wise, reaching for the first fractal and the second fractal. That's just my predictions, however. So just please follow your own predictions. It's just something which I need to. I need you guys to take a very close, or pay very close attention towards, because I'm not going to trade this possibly week. Instead, I'm just dropping my predictions of the week. So this is not how the market will move. This is pretty much what I think and how I think the market will move. All right. So it's two major different things. So now let's just jump over to NQ. Let's see here. Over here on NQ, you can pretty much see two STE alignments. Now for NQ, how I analyze it is pretty much just locating levels. So I'm just locating levels of STE alignments, and we pretty much have one, I think, resting here at 21, 50, 60 here as well. So if that fails, we're pretty much most probably going to trade down towards this alignment here as well. I just have it in my head, so it's just how I remember it. So we have these two given STE alignments here. You have a level right there. You have a level right there. And I got this from standard deviations. This is pretty much your homework I'm going to give you guys. So please just do your homework here and find these two given alignments, right? Now, particularly what I'm keen on watching here is just a sweep of a primary low. So a sweep of this, and then trade it into an ST alignment and high prices. Now, same thing goes for this, right? Because if this fails, and if we continue trading on lower, we'll have this low right there, and this is pretty much located in OT. So I think we either trade down here, reach up higher, trade down here, reach up higher. This is just predictions. How I pretty much would consider trading NQ and would consider overall looking at NQ. I would not go higher than 4-hour time frame. I would think it's unnecessary, in particular because I think we're pretty much always going to be bullish on NQ, like on the weekly to monthly. We on week to week, month to month. I think we're pretty much on most cases you're going to be bullish, and when we're not bullish, you're pretty much going to see very bad price action. In which case you can follow the market cycles, which I've dropped in the playlist itself as well. So please check out the market cycles to predict when NQ will fall or stock market crashes or anything like that. But particularly, I'm keen on watching this trade down here and then reach up higher, or trade down here, reach up higher. That's just my predictions for NQ. Now let's just jump over towards market bulls. So going in towards the DXY here, what everybody can see during the COT is pretty much resting here. We're doing this bullish buy program. What you can find interesting is that on any given foreign currencies, we have actually jumped up higher with this, which is the open interest, meaning they've bought up a lot of foreign currencies. And you can pretty much, interestingly enough, see that happening on all the given foreign currencies. Now, what does that mean? No, not Japanese yen, but you can see on Canadian dollar, etc. You can see this actually happening and this being the case. Now you can also see we're actually in a bullish buying program here. We're in an overall bullish buying program here, we're also in a bullish buying program here, however not on the DXY. And when do I think this will drop? Well, I overall predicted it would drop. It actually has not happened. I actually predicted this little thing, and I thought we would drop down lower, continue down lower. That did not overall happen. A little bit sad, I would say. And I think this will overall happen after the given, next year, I would say. So 2 years, or not, like 2 weeks after uh, January, I would overall predict us starting to drop and starting to create the sell swing of the market maker sell model. Until then, I think we're gonna be in a more or less bad price action period. And I'll now teach you guys how you can see that on seasonalities, which is this course teachings. So just jumping in towards the seasonalities here, what everybody can pretty much see is when you have the seasonalities aligned, all right, and they're displaying a move, that's when overall the highest probability of the move occurring happens. However, when the given data points on the seasonalities is not in agreement, that's when you will see the bad price action and a bad price action period. However, what I would suggest to you guys is relying on what the majority tells you. So if the majority, like the 10, the 5, and the 2, says a certain thing, I would rely on those things, while the 20 and the 15-year-old data points tells you pretty much that it would do something else. That would overall you would not rely on these two then. You would just rely on these three instead, and you would just take away these two. Alright? However, if all of these is showing a little bit of different things and not a same move on the given periods, what you will do then is that you will pretty much expect bad price action to follow. And in this case, you can see that we have one pretty much chopping around, one chopping around, one having a great move downwards, one having a great move downwards, and one chopping around. However, they don't have the same given move annotated. Some of them is showing consolidation, which we're relying on. Some of them is showing a move down lower, in which case that's not something we're particularly keen on following. Alright, so that's not something we're particularly keen on following. So what I'm predicting is, of course, that we most probably will have bad price action, because consolidation pretty much means just bad price action in my case, right? So I'm not really good at trading consolidations, and that's pretty much what we have also seen. If you zoom out a little bit on the DXY, you'll pretty much see us being in a consolidation. Now, when do I think the good price action will start? I think the majority of these actually will start pretty much here at January to February, where I think we're gonna see a little bit of a move downwards for the given DXY. You can pretty much see these if we just take this away. You pretty much see the 5-year-old pretty much having a great move downward, down lower, and that's pretty much what I think will happen. You can see, even though they're contradictory, could see some bad price action here as well. But when you have a move, in the same direction, more or less here, so you can see this move on all occurs on all of them. So you can see they move upwards here. So this is just an example of when it's aligned and when you pretty much predicting a real probable high prices. So this would be a case of where you would predict high prices. This area right here, this move upwards. So then overall you would rely on all of them, and if all of them is showing the same thing, you can see this they're pretty much showing exactly the same thing. That's when it will occur. However, when they are not aligned, like overall here, that's a bad period of bad price action. So not the best period to trade. But when the moves is aligned, that's all. And of course, if they are aligned with COT, that's even better. And aligned with your analysis, that's even better. Anyways, I think that was it for this given call. Hopefully, you guys learned a little bit more about the markets. And I know this call was a little bit fast, but I think these fast calls is a little bit more better for you guys. Because I think you guys have a short attention span, but also pretty much then I can fit in a lot more of these calls in the given day to day, right? So you guys pretty much will have the best ability to be up to date with the markets, but also learn pretty much my aspect of the markets, but I also how I read the market, how I think about the markets, etc., etc. Thank you all so much for this giving call, and see y'all tomorrow actually. Bye guys.